One.
Nice day yesterday. Up almost 50 handles. We're up today. I really not see why. I do see some decent amount of red on our screen. Caterpillar is not helping. Not a big stock, but Sarepta's having a bad day. Not sure about turnaround Tuesday, but two winning days in a row would be a rare thing. New guest coming on at 8:35. We're going to be talking to T3 Trading. See what's going on their trading floor with Derrick Oldensmith. It's a Tuesday. It's pre-market prep. Let's get it started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, welcome traders and investors. Starting out in the green by 9.5 handles, 41.95 1/4. Just flirting with yesterday's high right here at 97.50. The buck pulling back after a down day yesterday, down 9 cents at 105.85. Bonds were cheering the bond market up nearly a point over 110. That had been pretty good resistance. Crude back over 83. We've got a couple bottoms in the same area. Will it hold? Up 82 cents, 83.13. Gold back over 2K, up 320 at 2008.80. Silver in the red by just about 8 cents at 23.22. And let's call Bitcoin futures flat at 34,770. Let's bring in Triple D here on this Tuesday morning. And Dennis, I mean, we're up. We were up yesterday. Is it an up where you're like, whoa, let's go, let's rev the jets, or it's just kind of just like, okay, we were oversold, we're getting a little bounce, we're going back down?
Well, I'll give a perspective. I mean, look at the IWM. Where's the bounce, Joel? Where is this huge bounce that you're talking about? Show it on the charts. Look at the long-term chart. Show me like, wow, this is let's go. It just doesn't feel like it. We are at a major level of support on IWM, though, so I will say that. We're at this 161 to 162 area where we've been there for a long time. I do eventually think we're breaking down. I am using the bounce as an opportunity in some stocks to lighten up. So that gives you where, I am. I'm actually raising 60% cash, and I raised more cash yesterday into the bounce. One stock that I sold was Enbridge. Reason I'm selling it is the information from when I've bought this stock has changed. One, ENB is a ticker. One is that they did that merger. Obviously, it wasn't good. I gave it a pass for a while thinking, well, maybe, but they took on so much more debt because of that merger. And then two, long-term rates have just exploded. So now you look at this and you think, okay, well, yeah, it's got an 8% dividend, but there's a lot of debt and a lot of risk for that 8%, when your risk-free rate, GIC rates in Canada now are 5.75%. So the risk-free rate, Enbridge, Canadian company, so it's comparing apples to apples. So only picking up really 2.5 points over the risk-free rate, and you're taking on all that debt. So if they wouldn't have did this deal, I don't think the stock would have been, where they did that deal, 2 months ago, you remember it. I don't think the stock would be where it is. But at a certain point in time, you just got to say, look, they keep hammering stuff with debt. Enbridge is loaded with debt. Yes, it's a utility. Yes, the cash flows are typically stable, but I don't like that new deal. I'm going to sit on the sidelines for a bit and maybe wait until rates actually start going down. But at this point in time, I sold the majority of my Enbridge. I took an 8% loss on it.
And that's not even the. Remember when we talked about it? When you I told you they got this big old pipeline under Lake Michigan that needs to be replaced. I mean, and if that
I
thing
think
blows,
that's minimal, though. I don't agree with you on that. I've researched that after you even said it. I don't think that's a huge expense. The biggest problem with these companies is just debt load. I mean, this is why utilities have been hit. They took on a lot of debt to do this deal. So I didn't sell it because of the pipeline thing. That was known information. I didn't like the deal when they did it. And now that rates have done what they have, I just think it's time to cut the loser. I wish I would have cut it when it went to 33. It bounced a little bit yesterday, so I'm using that as an out. It was a disappointing trade. Obviously, it was an investment. It was a disappointing investment. But at some points in time, don't be afraid to cut your investing losers, folks. Like, information has changed. I just had a fantastic question. Mitch, come in here too. Bring Mitch in for this discussion because it's important for him. And obviously he, he's a trader as well. But I just had this great question from Lorenzo in my Twitter. And he said, what's the criteria for cutting losers? Do you have a certain percentage? It's discretionary. What do you use? In trading, and we're going to let Mitch answer this question too, because it's very important. In trading, I give my losers very little room. They start moving against me. I'm typically already looking to get out. So my trading account, which goes to cash every single day, my trading account, it goes to cash, whether it's winning or losing at 10 a.m. I go to cash, 100% cash every single day. In my investing account, I don't do that. I do other things. Obviously, I'm looking to invest longer term on fundamental information. When do I cut the losers in my invest portfolio? When fundamental information changes, typically. So when, and the information that changed on Enbridge was, one, they did a big deal, took on a lot more debt. And then two is rates have risen so much that debt is a lot more money for them to handle. So there's two reasons why I think that, Enbridge, not that they're in trouble or anything, but that they could have more trouble servicing that debt at these higher interest rates. So that would put the dividend potentially in jeopardy. So that's why I cut the Enbridge out. So that's my criteria. Mitch, what's your criteria for cutting losers? And we'll ask Joel the same question because it's important.
Yeah, especially for day trading, it's going to be always based on the trade itself. There's an objective plan that's set as before you take the trade and just kind of sticking to that. I like to stick to 3-to-1 outlooks there. So essentially my reward should be 3 times the amount that I'm risking. And a big part of that is just trying to keep mathematical advantage, right? I think that's the number one thing that a lot of day traders just do wrong. They immediately just start kind of ripping up their mathematical advantage. They have different risks to rewards on each trade, and then it's very hard to have a mathematical advantage in your system. Now, when it comes to swing trading, that's really when I focus on cutting those losers small, because the number one thing that I've learned in swing trading is if I let my winners work for me, they're going to expand that equity wave and let me drive higher. And I think that that's really where my bread and butter is. So I focus on that aspect. And for those types of trades, sometimes it does change because there's different trading environments. Sometimes I can risk up to, let's say, 5% on a trade. But other times when things are a little bit shaky, I'm going to go in and halving that to like 2.5%. And it's going to be really where you find the sweet spot on the reward side also. For me, that's going to be kind of like 4 to 6%. Right. And then on environments where things are doing really well, I can look for that 10%. I think it's important to cut those losers really small, keep it small, and expand those winners.
Mitch, I think you're spot on here. And what I'll say again, I'll reiterate this. What makes me a successful trader? And yes, I have been a successful trader. How do I know that? I've been in this business 23 years, actually going on 24 years. No, it is 24 years now. It's going on 25 years. And I have made all of my wealth from trading, all of it. I started with nothing. I started right out of university with basically nothing, borrowing some money from my parents. So my entire net worth has been created from trading and investing. I've not really had another job. Like I obviously we did this podcast, and I get paid a little bit of money for this podcast, but it's definitely not my bread and butter. And it's only been we've been doing this almost 10 years. It's crazy we've been doing this 10 years. But the majority, like say 98% of my net worth has been created from trading and investing. It's not that I'm this guru, that I know what's going to happen next. It's not why I'm successful. Why I'm successful is I have discipline. And I cut those losers when I can. And I cut those losers in my trading account no matter what. In my investing account, I give it more room. And sometimes it's a mistake. And sometimes you should just maybe cut them more in your investing account as well. But in my trading account, I have zero tolerance for losers. If something gaps down on me 30% overnight, and I've had it happen, I've had stocks taken over where they went up 60% on me overnight. I don't sit here and hope it comes back down. I cut the loser and I move on. And that's it. People asking me why, you go to cash at 10 a.m. every day. So
yeah,
I've been doing this for about,
that question.
It's a good question. I've been doing this in my day trading account, day trading overnight. So it's day trading overnight. I call it a 24-hour account. It's my max hold time in this account. Swing trades would go into a different account. I have a separate account for swing trades, which I haven't been doing a lot of swing trading lately. I typically, did a lot of swing trading in 2020, did really well with it. But in my day trading overnight account, I've got this max hold 24-hour, just my style. They're supposed to be short-term trades or scalps more than anything. Looking at different, strategies, doing arbitrage. I've talked all these strategies, run-ups into earnings, all the stuff that we talk about all the time. You guys kind of know how I trade, on different, I don't use technicals as much. It's mostly, statistical arbitrage, sympathy plays, run-ups ahead of events, run-ups ahead of the earnings, all that kind of stuff, that I'm doing in that account. And what I specialize is overnight trading as well, where I think something's going to be strong the next day. I might be taking it overnight. I think something might be weak the next day. I was trying like hell to short XBI last night on the Sarepta news, which we'll get to here in a second. It'll be a good segue. I didn't get the short on because it went really fast, but I was trying, actively to get short that because you knew it was going to go down the next day. That's an arbitrage trade. So lots of different, styles of trading. But the reason I go is I've struggled with the middle of the day from 11 to 2.
Yeah,
I've said this on the show for the last 13 years. 11 to 2 is very difficult to day trade. One, because I'm an information trader. I specialize in earnings reports and analyzing new fundamental information. Middle of the day, 11 to 2, there's typically no new specific fundamental information coming out. Sometimes there is, but there's not company earnings reports. There's not usually, the Fed meetings don't come till 2 o'clock. That's why I say 11 to 2, because sometimes we'll have a Fed meeting or some Fed speaker or something. But for the most part, that 11 to 2 is a very difficult time to day trade. It's a lot of chop, a lot of bots, a lot of slop. So I just don't typically trade those hours. So I get to cash ahead of those. And then I start putting positions back on after 2 o'clock, typically very specializing in the close after 3 o'clock. So, my hours of trading really are 3 p.m. overnight, pre-market, open. And then after the open, I'm slowly getting out of stuff, a little bit of, moves, and then typically out of everything by 10. So basically my day trading hours are 3 p.m. to 10 a.m.
The good stuff. I'll tell you right now, Dennis is taking his time to explain it to you guys so you guys can truly understand how he comes after it. But what day is today, guys? It's Halloween, of course. And I want to throw it out to the chat. What do you guys think Joel dressed up as for Halloween? We got a picture, and I want to throw it up to the chat.
Okay.
Joel, who's going to get this right? If you get this right, like right off the top, I'm going to let you know right now. Hit me up, Mitch at benzinga.com. I got to get you some Benzinga Pros, some swag, something. Let's see what you guys got in the chat. I'll give you guys 5 more seconds to throw those up because I know we're a little delayed here. But I'm about to go ahead and mention it. And we're going to have a good time also on live trading after this. We've been doing the trading competition. I'm going to be dressing up. We got Ryan dressing up. So if you guys
I didn't know that
all day,
we should have got dressed up
live
here
trading.
Too.
Yeah, we should have got dressed up here.
I'm sick and under the weather, so I wasn't even thinking about it.
You're sick, Denny. Don't worry.
Yeah, that's what
all right, here's the chat coming in
Denny.
here. We got Jim Harbaugh. That would have been hilarious.
Nice.
Michael Phelps. Yep. My boy Joel.
He looks like
I got my swimsuit on, guys.
Yeah,
Girls.
he did that this morning. He did the Michael Phelps thing. Oh no, Joel, we're talking about you hitting the bong, Michael Phelps style.
Oh, that's right. That's right. Yeah. Oh, wait, hold on a second.
All right, we've built this up a lot. Let's see this pick.
All right. So this is all I got to say, guys. I need somebody help, not just anybody help.
Joel and Lisa look great. Holy mackerel. You guys were
guy.
hippies back in the day, weren't you?
If
That's
you
the
need
way
help,
you actually
just call
looked
Joel.
in 1970, wasn't it? That was like an actual, like the way you looked in 1970.
Where's the joint?
That's great. I'm sure they had those back in 1970.
But I mean, Lisa with the Yoko Ono too, man. I mean, I think
she looks great.
Yeah, man.
Yeah.
You gotta be careful with her. They're gonna take her. That's why Joel keeps her tight.
That hair, Joel. Did you have your hair that long back in 1970?
No, not in 70, because I was only 7 years old and I was a very competitive swimmer. But when I got married, it was pretty long. That was a long time ago. But come on, all right, enough making fun of me. There it is.
Great.
All you need is love. So let's move on.
I love it, Joe. All right, let's kick off with that XBI story that you were just talking about, Dennis. I'll let Joe kick it off.
Yeah, give us the news, and then we can tell you about the trading, and how I determined that this was going to fall 50% last night. Sarepta, SRPT, give us the news here, Mitch. It got
I'll
halted
give you
right
the
at the
news.
close.
Joe,
So
Yeah,
for-
yeah.
5 seconds
Yeah.
after the close, they halted it, and then you're like, "Oh boy, what's this news?"
yeah,
And it's not good.
That's always not good.
Okay. All right. Let me give you the
Mitch
Sarepta
gonna give the
news.
news.
Reports top-line results from Embark, a global pivotal study of gene therapy for Duchenne muscular dystrophy. Says primary endpoint was not met on a drug that was already approved.
Yeah,
Wow.
yeah.
Yeah,
This is a
ouch.
bad look. Wow.
Yikes.
There's so much to unpackage here. Obviously, maybe we should bring Adam Fierstein on if we can get Adam. We haven't had him
He's
for a
hard.
while
He's hard
here.
to get on.
He's the master. He's the master, and he's hard to get on this. I always look at his tweets immediately to get his thoughts, and he's like, I got a lot of thoughts on here, and he's researching further. So he hasn't said too much on this yet either, unless he said it this morning. But as last night, he hasn't commented too much. I mean, you're right, Joel. This drug is approved. This drug is being taken. It was a mixed approval. This was, obviously recommended. They had a panel going. We've been following this story on this show for a very long time. I mean, years we have been following this story. Awful disease. They want a drug that obviously, they need a drug for this awful disease here. Sarepta, which Duchenne muscular dystrophy, has been working on this drug for a very long time. It got approval. I'm trying to guess when, and it was a while ago. Like I'm going to say like 2020. I may.
Oh, it was longer than that. It was when we were in the office. Actually, Benzinga. Remember, we spoke to a young lady that had 2 sons that were taking the drug. Remember that? That was a lot.
Yeah.
I wish I could find her in our thing. But anyways, go ahead.
So in any regard, it's been approved. Chat might know when it's been approved. It's been approved for a long time in a mixed panel because it wasn't 100% known if this drug really worked or not. So now you get top-line trials coming after the drug is being used, not meeting key statistical primary endpoints. Or secondary endpoints. This is difficult. Does this mean the drug comes off, the market? Do they keep the drug on the market? All those questions still to be answered. Yeah. But right now, this drug is being used, and it didn't meet the primary endpoint. So that is just scary stuff. So we'll leave it at that because that's all we know at this time. We don't know if the drug's going to come off the market. We don't really know, the implications here. We just know that obviously the stock was going to have a significant fall last night. So XBI, when this news came out, and it came out obviously like a minute after the stock got halted, stock remained in a halt. They hammered XBI. And if you look, XBI was 1.39% Sarepta. They basically immediately knocked 1.3% off the price of Sarepta, off the price of the XBI. I'm like, holy crap. Like they think this is going to go to zero? And obviously that's not the case because it's going to be other biotechs that get hit in sympathy, which, obviously is going to knock down the index as well. So you got to kind of discount some of that back. But when they knocked XBI as much as they were knocking it down last night, I'm like, they're probably going to knock this stock in half at least. And then, so I go use my trusty technicals and I'm looking, well, what's the level? What's the level where this logically bounces? I went to that double bottom in April and June, which would put us down about 48% or 47%. I was looking at that 60. So I tweeted out, I put the 65 as the over under. It's coming in under that right now, but you can get a feel for like why, the stock was going to get hit. So, just using the indexes, using the ETFs to try to price out where you think this is going to go. And then using the technicals too. So I'm using like multiple tools to come up with a price, which I was pretty close on, saying 65, the thing 64, 68. I said that when it was 107.65. So pretty close to, it was $62. So pretty close to being right, just using the ETFs and the technicals to try to guess where the price is going.
And if you got to have a mathematics degree, but I filed you on that one. It's a lot. Just real quick, we're sneaking into the 4,200 handle here. I mean, it's dropped. It's down here. I mean, I guess if you've been waiting to buy this at a discount, here's the discount. I don't know where it goes from here. This has done this over the years several times. It's had big up moves and big down moves. I remember looking at this one a while ago, and I'm like, I don't have any exposure to this sector. And I decided I didn't want any exposure to this sector. So just huddle in here in the lower 60 handle. I could give you the pre-market low. You can use that as a parameter. Boom. Who knows what they'll come out and say later in the day. Wow. Pre-market low is 58.09. So I'll call that potential. Well, no, 57.23. I stand corrected. So it's $5 off the low. So I think it might thicken up a little bit as you heads back toward 57.26. And then the monthlies here. Sarepta made a couple lows in the lower 60s. Wow, exact double bottom on the monthly. May and June of 2022, 61.28 is the number of the day in the regular session.
Apple kicked off their Apple event. Let's take a look here, of course, as they introduced M3, M3 Pro, and M3 Max chips with major GPU upgrades, new 14-inch, 16-inch MacBook Pro, and M3 chips up to 22-hour battery. MacBook Pro also, it released a new space black color because, you know, that increases the value that much, you know. But also, chips here said to have 60% faster neural engine for machine learning. Of course, they're talking AI in the improved Max M3 Max chips. So that's what they wanted to talk about and kind of talk about how this will help AI. And then also the iMac was pretty interesting, as you guys can see here. They're still keeping the nice little kind of smaller design. And giving a nice improvement with this new chip. One thing that was mentioned multiple times that I think is important here was not only that, you know, they have new products, but what was really important was that they're better than Intel. They mentioned this multiple times throughout the presentation. And every single time they talked about one chip, they went and talked about how is that much better than these Intel chips. So I think moments like this where it said 11 times faster than the fastest Intel-based MacBook Pro. And this is the competition now that's coming for Intel that Intel better watch out.
And that competition was coming from Intel for a long time. Much of that priced in. Like Intel, we know, has lost, you know, there used to be Intel inside. Everything was Intel inside. And it's just not the way it is anymore. And AMD's obviously eating a lot of their lunch. But, you know, obviously Apple trying to tack into that market as well. I don't think any of this is market moving. Obviously, the stock doesn't seem to care whatsoever about this. It's trading down 30 cents on it, which is where exactly it was trading last night ahead of this event. Market has come up a little bit, so Apple did not come up with it. We're all waiting for the Thursday report. Thursday night is what's going to matter.
I mean,
do you get a run up ahead of it? Well, we've had a run up ahead of it. We just ran from 165 to 170, so we've had a 5-point run up. Could you get a little more run up ahead of it? Maybe. I think people are going to be a little bit nervous going into this Apple report here, though. But like I said, upgrade cycle seems to be going okay so far. Let's see what they say Thursday night.
I just don't understand why they did this now, you know, a couple days before earnings, right?
Maybe they know something negative that's coming soon.
I just like, market had, you know, helped the market out yesterday. Nice rally yesterday, traded down 33 cents. Short-term technicals on this one. You have a good level here. 171.25. So you're, you know, that on a relative basis is kind of weak today. You're not trading through the previous day's high. So 171.25 until it can get above that. Limited upside for Apple. Yesterday's low, that's way down there at 68.87. So resistance easier to identify than support here in Apple, and 2 days ahead of their report. But to
one thing to consider on the Apple report, and we'll talk about it more, obviously Thursday's show ahead of it, but I don't think Apple has to blow it away to go higher. Expectations have come in a little bit here. We saw Amazon, good numbers, decent numbers, really rally. The one thing that Apple the one thing mainly Apple has going for it is the debt is very low. So again, we're going to continue to preach that, is that at a certain point in time, it's just much more attractive than some of these companies that are loaded up with debt when the rates are this high. So we had this conversation yesterday, though, talking about financing and 0% financing still on some of these iPhones being attractive. I mean, it's still a luxury item, but it's a luxury item that people can actually afford. So you know what, I'm not full bearish Apple here right now.
You know what also they could do? They could raise their dividend.
I don't think they're going to do that. That would be gutsy in this environment. but they never know what. They could say a lot of different things. I think let's save a lot of this commentary for Thursday morning show, because we got a lot of earnings to go through here, and I'll get some more thoughts, and you guys can get some thoughts on Apple here as well. But I'm on the fence on Apple. I was that 190, 185, 180 valuation. Valuation's still too much, but that debt, being so low debt, really is attractive.
The chat wanted to bring in the WDC mention here, and I think that's a really nice catch by the chat. So shout out to you, DJK, calling out my man Triple D, giving him some love, because I know he gets the hate out there. So here's some love for you, Dennis. Right. WDC, Western Digital announced a proposed $1.3 billion in convertible notes and offering here on WDC. What a move, right? Let's give them nice earnings. Let's stuff them after that with a nice little offering.
The split up of the company. I mean,
we'll just add that as a bonus to make it sound better.
They did all this stuff to pump the stock up, and then they shoved the offering down their shareholders' throats, and it gives it all back. We talked yesterday on the show. The stock was $44 yesterday in the pre-market. And we're like, as no business, we have no business. Financial engineering was popping up mainly because of the split. We were very bearish the stock yesterday. Flat out said if I owned it, I would sell it. It gives it all back in one day. So we got this one right.
Yeah, what we put together, the pre-market high was over $44, $44.74, and then I talked about a daily high that was at $44.57. Then I talked about all these people that got smoked on Thursday, and they're like, "This thing's back at 43, 44. Are you kidding me?" And then they come out and do the offering. I don't know. I owned this stock a long time ago from the Rev. It had a huge run. I don't remember when the run up. Could it have been in 16? But I remember, and it had the big dividend. Well, yeah, and then I kept, and you guys kept it going. You buying it back? You buying it back? I'm like, no, I'm not buying it back. I'm not buying it back. And I don't know, just a wonky stock here. Let's see. Man, now it's got a gap to fill. Might fill that gap today. So 39.41 was the high on Friday. So if you're looking for a gap fill, you can get it off the offering.
Let's get to pen interest. Joel's favorite stock here. This was a surprising one. I'm going to say I got it wrong on this one too. Q3 adjusted EPS here at 28 cents beats the 20-cent estimate. Revenues $763 million versus $743.5 million estimate. Global monthly active users increased 8% year over year to 482 million. One thing that gave me a little bit of insight on this was I saw how Snap was kind of performing before this. And I was like, man, does Snap know something that I don't? Because it was leading up into the open. We'll see if Snap can really get moving off this report.
Well, Snap already reported, so it probably doesn't. Snap obviously had the big pop to 12 and then gave it all back on its report, which its numbers were fine. Pinterest, a nice lift. Again, I'm not chasing stocks in a bear market. So if you're buying stocks up 16% in a bear market, you sometimes do get follow through. It's not a great idea to short them on day one. I mean, Amazon is continuing to move higher here now after its report. So it's easier to kick the stocks that are down than kick the stocks that are actually going up. So we've talked about that with short selling before, shoot the stocks in the back when they're going down, as opposed to when they're going up in your face and trying to shoot them in the face, because you don't know where these things stop. 30 seems like a logical stopping point if we're trying to call it. But again, I'm not shorting the stock because it's not on day one. I usually like to wait until they start to leak.
Was near the lower end of the range yesterday. Now you're up at the upper end of the range, filling a gap here at 29.61. I just have to respect these two candles here. This was back in July. I don't know what the news was, but you got the nice pop. You had a red candle on the day of the news, another red candle the following day, and then ended up leaking quite a bit. So definitely not chasing it up here. And if you're, been looking for this 29 to 30 and a half area, watch your bids here, Dennis. Whatever came out at 8:30, they're not.
You guys didn't warn me.
It's the employment cost index.
Yeah, it's not much, man. It's not much. Like no one ever pays attention to this number.
Tank 6 points on it.
Bing, 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 bing.
Sneaky number.
Well, they're
No.
already factoring in the higher GM and Ford and Stellantis wages, so it had an immediate impact on the employment cost index. And now
Oh
and now
man.
rates are going to 14.5% because of inflation.
Employment cost index. Are you serious, guys? When's
They're
the last
moving.
time that we ever paid attention to that number?
We pay
Have we
attention to all
ever
numbers now.
mentioned that number on pre-market prep? That's all I got to say. Have we ever mentioned that number on pre-market prep? No.
So we get ahead here. I don't even remember what stock we were talking about ahead of that. I guess it was Pinterest. But
Pins.
all right, I have no comments on pins. I get big difference between Pinterest and WDC. They were both rips, but rips from a point of distress where WDC traded down near the lows, lots of overhead supply. You could say the same thing about Pinterest, but Pinterest isn't off much from the highs. It's not off like the other ones are, like Western Digi, which has just been an epic disaster. So there's not as many bag holders in a stock like pins, which makes it not as easy for it to go down. It's bag holder central. Then when you get the pops, they almost seem to always give it back. At least in this market, it seems to give it back. But there's not as many bag holders. And even in the Amazon, as of late, there's not as many bag holders because the stock wasn't that far off of the recent highs. So where you get WDC significantly off, up on financial engineering and stuff, it was an easier sell than this Pinterest is going to be.
And I'll just go longer term on this. I mean, if this thing could ever clear 30 with a gusto, I mean, you had that one
And
time.
you have Elliott in there.
Yeah, you busted over 30 back in July, but that was kind of short lived. But look at all these are monthly tops here. So, man, you build a 20. I don't know what's going to happen today. I don't know what's going to happen in 6 months, a year. But, man, if this thing ever gets a solid 30 bid here, tell me where it's going. It hasn't even really had a meaningful retracement. And I still don't understand. I mean, what do people post, like recipes and stuff on there? What the hell do they put on that platform?
I don't
They
get
put
it. But one thing to consider too, Joel, Pinterest, zero debt.
Oh, okay.
These are important. Like, just go in your pro before. This is the one exercise in this market that you absolutely need to do. Every single time you think about buying a company on a chart for your long-term portfolio, at a bare minimum, go into your Benzinga Pro. Most of you have it. Type in the details and look at how much debt they have, because it matters, folks. Debt matters. WDC has $6 billion worth of debt, loaded with debt. Pinterest, a zero debt. Zero debt companies are actually doing and holding up quite well right now. If you would have separated all 3 months ago and bought all the zero debt companies and shorted all the loaded debt companies, I think you would have made a killing. So that's, the biggest thing in this market. As interest rates have come higher, the debt load absolutely matters.
A professor once told me in college, he said, pay attention to two things and it can make you money if you understand it. One being fiscal policy, the other being monetary. In this case, monetary, ruling these stocks as interest rates and prolonged interest rates will be on. And we don't know when they'll cut that rate, right? So a lot of these debt heavy companies will be in pressure. Let's keep going.
And remember, the biggest issue we've had in the last couple of months has not been the Fed. The biggest issue, it's been the long end. And the Fed doesn't control the long end, the traders do. So the traders have said Fed staying high for longer. I mean, I never would have thought, you're looking at the 10-year getting up to 5%. I never would have thought we'd see that in this environment. I wouldn't have thought it ever again. Now, and you can never say never, obviously, but, where Rick Santelli was saying 14%, I mean, again, or 12%, he was saying, I mean, if we get there, this S&P is going to be a hell of a lot lower at that point in time. But you can't argue with it right now. I mean, we still have the TLT flirting with lows. Yes, it bounces today. Probably a reason that the overall market is trying to bounce a little bit. Bounced off the lows yesterday. Trying to form a little bit of a bottom in here, 82 to 85. That's good. Let's get up over 86. Like I was giving the 90. Well, even before we start looking at stocks, let's get up and make a new high on the recent move. Recent high 85.35 on the TLT. We need to get up and see what we do here. We're still just meandering, hanging out. I'm just concerned that we're consolidating and go lower. So got to be somewhat cautious. I still have my half size position in the TLT, but you absolutely just can't buy these stocks that are loaded with debt until we start to see a sustained rally in the TLT. I'll keep saying it.
And we have Jerome tomorrow. We have Pump and Powell tomorrow, and probably going to get another hawkish pause. He's not going to give you what you want. He's not going to say we're done, we're turning, we see a recession, we're lowering rates. It's going to be the same mantra that he's had for the last 3 or 4 months. So be prepared for that. The jobs number on Friday, I mean, it's Apple in between. The jobs, I mean, and unemployment, I mean, it's just, it won't go up. It won't. They haven't been able to bust it. There's a lot of other factors going in behind that.
All right, let's sneak one in here really quickly. Kat, I wanted to get to it at least, and this actually plays off what Dennis was just talking about. So adjusted EPS, $5.52, beats the $4.76 estimate. Sales of $16.81 billion, beat the $16.53 billion estimate. Yet, look at that hit there, guys. And what has been said here, revenue dips quarter over quarter across all major segments despite year-over-year growth. And this is one that we've been pointing to, how the industrials had just been getting whacked, and I don't expect to see this change.
Caterpillar's main issue going forward here again is going to be that their customers need financing to buy their products. So it's not always about, and they have loaded debt in their own company too, but it's not even about that. With the solar in some companies, it's about the big ticket stuff, needing financing to buy their products. The financing is a lot higher. There's going to be a lot less people buying machinery in 2024. I'm predicting it now, and it's not that hard of a prediction. So I think Caterpillar has been sold off because of the long-term rates, and until rates start to actually turn around and start going down, Caterpillar and Deere are both no touches for me.
Not much in here. And I'll just give you the pre-market low, 228.20, and then if you're looking for a bunch of lows in the same area on the monthly, you're looking in the lower 200s. Won't see that today, though.
All right, team, we got a new one for you guys today. I hope you guys enjoy this. We got a new guest. You guys smash the like, get ready. We're going to get into a little T3 trading group action.
Ooh, nice.
You don't want to miss this. I have a feeling, and I love that he's ready to go. We're going to talk about a top-down approach, share the screens. Get ready, team. We got a good guest segment coming up. Derrick Oldensmith, Senior Trader and Managing Supervisor for T3 Trading Group. It's good to have you on, Derrick, and ready to talk some stocks, man. It's been a tough market lately, so good to meet you and bring you to the pre-market prep crowd.
Good morning. It's a pleasure to be here. Lot to chat about in a short period of time. Is it cool if I just jump right in?
Yeah, let's do it. I see your charts ready to go. I'm going to put you up here. Take the reins, my friend.
Let's do it. So we're set for a little bit of a gap up this morning, right? The S&P looks like it's up 0.1%. The Qs are flattish, and the IWM is leading a little bit up 0.25%. Let's just pull up the daily chart. So just real quick about me, because I don't think anyone really knows who I am. I've been trading professionally since 2008. I've been trading with T3 since 2010. So I've been doing this specifically with T3 for 13 years now. I've been managing a group of professional traders for the company since 2013 for 10 years. That group started in the downtown New York City office as me and two people. If you fast forward to the present day, I'm now directly managing T3's largest group of traders, a little bit over 125 professional people on a day-to-day basis. So it's a big group. I do daily morning meetings and afternoon meetings every day for the team. So this is just, part of my normal process. I take a top-down approach to markets where I pay attention to obviously market technicals, big picture down to small picture. I also pay a lot of attention to sentiment, positioning, flow, things like that, which over the course of my career, I have found have had a really important impact on how markets actually work. So where are we coming into today? I think we officially entered correction territory for the S&P a couple of days ago, which means that we're down over 10%. If you actually look at the IWM, which I think is a better representation of probably your average stock that's out there, the IWM is down more than 18% on a closing basis from the July highs down to the lows of where we are right now. So it's been a bit of a bloodbath since that high in July, where we were seeing sentiment was starting to get a little frothy up there, positioning. Everybody was covered all their shorts and was getting in on the long side of the market just for us to roll all the way back down. So now, as we're pretty much getting near bear market territory again for the IWM, the obvious question is what happens next? Your short-term technicals here are very clearly and obviously bearish. We're in a downtrend on the small time frame, the intermediate time frame. I would still make the argument that the very large time frame is neutral to bullish, depending on which index that you're looking at. You can see we still have a flat 200-day for the IWM. And if you really scroll out on this IWM chart, you can see that we've been stuck in a range between 162.50 or so, which we've really tested the last couple of days on the downside, and 200 on the upside. And that range goes back to, April 2022 at this point. So we've been stuck in this range for a long time. We're really testing the downside of that. So the big question is this support area going to hold? Obviously, you got a lot of bearish fundamental people out there on the sell side, but what do the technicals tell us, and what does positioning and flow actually tell us? I would say broadly, positioning is pretty neutral at this point. We're coming into the end of the month. We're supposed to see a pension rebalance here at the end of the month that could lead to $5 billion in buying from pension funds just with their normal rebalances, but that's into a whole bunch of CTA selling. Yet we all know November, December tends to be very strong seasonally. I'm not a huge believer in seasonality. I don't think just because a certain month of the year is stronger means close your eyes and buy. But there's a reason for it. The buybacks in the marketplace, which we know is an important flow factor for markets, are strongest in November typically and historically compared to every other part in the year. So as we've sold off 18+% for the IWM, as the S&P has entered correction territory, and as we're entering into this more seasonally bullish time where CTA flows should actually start to switch a little bit more to the bull side starting next week, and the buybacks can really come back online, I am looking to see if we can rally higher. But I'm also a big believer in technicals. I'm not just going to catch a falling knife. So I need the market to confirm to me before I buy. So there's two ways in which I would be interested in potentially looking to buy a market that's downtrending and that's beaten up. One is into what I consider to be more extreme extension. And there's a number of ways you can look at that: oscillator, RSI. One of the main ways that I look at it pretty simply is the spread between where the market is trading, where the 80 EMA is. That's my blue line here. Red line's a 21 EMA. I broadly consider the space between the 8 and 21 EMA to be technical equilibrium for the market. So historically, what we've seen over the course of the last year and a half is whenever the market starts to extend the SPYs or the Qs $10 plus away from the 80 EMA, whether it's on the downside or the upside, it's usually a pretty good time to start considering coming in the other direction for just a shorter term counter trend move. We saw it Thursday, Friday last week. Friday last week, we really started to hit more of that extreme downside for the SPYs. Thursday, it was the Qs, where it was $10 plus. We've also consistently seen, just with the geopolitical environment that we have going on right now, very weak Fridays and very strong Mondays. I think the NASDAQ has been positive 17 Mondays in a row, which is impressive.
That's a crazy stat.
Yeah, that is a crazy stat for sure.
Yeah, it's a really impressive number. I think for the S&P, it's like 15 out of 16 Mondays in a row. And again, if you consider that's within the confines of this market that's pulled down the way that it is,
yeah,
it made for a tricky setup coming into this week, because you kind of had to make a little bit of a stand on Friday to the bull side in order to catch Monday's upside move, which was difficult because we closed so weak on Friday, but it's just been kind of that consistent pattern. So as long as the geopolitical situation didn't totally blow up over the weekend, it led to a buying opportunity. So I started doing a good bit more buying Thursday, Friday last week, sold a little bit of that into this up move as we have approached the 80 EMA on the daily chart now. And the question here is really, can we get, further upside follow through? So again, one way in which I'm willing to buy a weak market is if we get more of that extreme downside extension. We saw a little bit of that Thursday, Friday last week. So I was buying a bit into that. The other way is if the markets can actually prove themselves on the upside. If we can get some sort of reversal pattern that comes in, or the bulls can reprove themselves. And we're still a ways away from that. There's a lot of big levels that the market's going to have to recapture in order for the bulls to look decent at all. So a morning like this morning, where we're having a small gap up and we're getting closer to those moving averages, which a lot of time, if we're going to continue the downtrend, this is exactly where the pivot high comes in. It just becomes a difficult spot to buy. But I don't love the risk reward on the short side here either when we're at SPY 416. I think if you want to take like Mike Wilson's bear case and say that the SPYs are going to go down to 390, we could bounce back to 420 before even we get that rollover. And if you start shorting here at 416 or lower, you could endure some pain before that pivot comes in, and that's assuming that you're actually correct. So I don't love the risk reward setup here for the market as a whole this morning. There are names in play. It is earnings season. So for me, whenever the market's giving me some uncertainty, I always feel like I can focus on stocks that reported earnings, got upgraded, got downgraded, that they're going to trade a little bit in their own universe to try to find some edge for myself. And there's also some sectors and individual names like the financials that I think are starting to look a little bit interesting. On the
Interesting on the good side, interesting on the bad side.
So if you look at this XLF,
I don't know if you know, I've been caught in a little bit of a regional demise, but you're saying that you're seeing a little bit of some strengthening in the financials?
A little bit. So first of all, obviously we got to look at probably TLT and look at treasuries before we can even talk about the banks, and particularly if you want to talk about the regional banks. So this TLT here has stabilized finally a little bit for the last week or so. If you're looking at the TLT ETF, $85 is a really important upside level near term. 83 is a really important downside level. So we're kind of testing this 85 again a little bit this morning. We're seeing some strength when yesterday the U.S. said they were cutting their quarterly borrowing estimates. Obviously, we've got the Fed tomorrow, so it might be a little tricky to make a big stand on the TLT right in front of the Fed. But if we can get this TLT back above 85, I think we might be looking at a shorter term, at least a shorter term bounce in treasuries. So interest rates coming down a little bit. And if you combine that with some seasonal flows in November, I think that we could see a decent uptick November, December. I just need the market to confirm it again, because I'm wrong as often as I'm right, but by positioning myself with risk reward and probability of success and making sure I'm focused on my risk management, it can enable me or any trader to be a consistently profitable trader, even if they're not going to be right all the time. So you need to see that TLT get back above 85. And then if you look at like the XLF ETF, that gave a nasty breakdown 2 trading sessions ago through the $32 level, just to fully negate it yesterday. Yesterday was one of the bigger up days for XLF that we've seen in a while. So now you're looking at potentially a false breakdown in the XLF. And as we all know, sometimes false moves in one direction can actually lead to bigger moves in the other direction. You sucker in more shorts, you push out more longs, and then if we are able to break back up, which we started to do yesterday, we're seeing some continued relative strength in XLF this morning, then you can squeeze out those shorts and new longs might have to chase in, or at least they're not on the offer selling on the way up. So I've got an eye on Bank of America yesterday, which gave a bit of an inside day. I've got an eye on JP Morgan, which got whacked further when Jamie Dimon announced that they're going to sell $1 million shares or whatever it was. But I still think JP Morgan is one of the best banks that's out there. And this KRE has really tightened up also. Obviously, the big story when you're looking at the regionals is if you understand why SVB and First Republic actually blew up, it's because of the duration of their treasuries actually and their inability to be able to hold them without taking massive losses on their books. Well, TLT can uptick and get back above 85. That can give some relief to these banks, and particularly those KRE names, which could cause you to snap back above $40 and maybe give a little bit of an upside move. So I've actually got those names on my radar today, and obviously, continuing to watch a lot of big cap tech just with everything that's going on, and AMD after the close today, Apple on Thursday. So a lot happening right now.
Talk about your typical setup, because you started saying, you take the top-down approach every day. I've been trading, and I was with Bright Trading. You're probably familiar with Bright Trading for 23 years as well. I trade on my own now just through IB. But I have a typical approach where I do the same thing every day, routine. I wake up, I do this, I do that. It's steps. It's the same steps every day. Can you just go through those steps? Because the chat knows my steps because I've talked about them multiple times. But it's nice to hear other professional traders, the steps that they take. Like from the minute you wake up, and get to your desk, what's the first thing you do to get, to where you're trading the open?
Sure. So I agree. Routine is a big part of this, and preparation is huge. I think that I make most of my money with the work that I do pre-market. That's my preparation. I liken it. So I'm actually also a retired professional fighter. I fought professional kickboxing for over 10 years. I had won 2 world titles and 2 weight classes. And what we always said in that sport is that the fight is won and lost in the gym before the fight. And then the fight itself, when you're actually in the ring and you're in front of all the people, that's just about executing the 6 to 8 weeks of work that you had just done to prepare for that moment. Markets and trading, to me, it's the exact same thing. My battle with the market, for the most part, is won or lost before the bell actually rings. 9:30 to 4, it's about execution of the game plans and ideas and thought processes that I created for myself before the market actually opened. So I usually wake up pretty early, 5:30, 6 a.m. First thing I do, roll over, grab a cup of coffee, and log into my trading system. I keep swings every night. So I combine day trading and swing trading. I probably haven't gone home flat in 7 years. So the first thing I'm doing is I'm seeing where the market is gapping. So for example, I have a position in Chewy. Chewy got an upgrade. It's up pretty big this morning. It's potentially breaking out a little bit on the daily chart. My game plan said into the price in which it was gapping up to that I'm supposed to sell stock. And I'm a big believer in following game plans. I think that game planning and risk management are really the key to success in this business. I think whenever anybody tells me about any psychology issue that they have with their trading, they hold their losers too long, they get out of their winners too early. I think that the counter to that is having good game planning and just following through with the game plans that you've already created for yourself. Because it doesn't matter how you're feeling. It doesn't matter if you're feeling nervous about the position going against you, or you're like, oh my God, I'm up a little bit of money, I better take this off the table. No, what is the preset game plan that you already created for yourself telling you to do? So any swing position that I have already has a preset game plan. I get a little bit lucky like I did this morning, and it's definitely luck when you're in a position already and it gets upgraded. Well, my game plan says I got to book a little bit of profit at these prices. So I was immediately selling some stock at probably 5:45 or so this morning when I first logged in. So I get an update on all my swing positions, and then I really start my research process. My research process is an update on all pieces of information and news. I take a look at a lot of institutional reports that come out of the big banks, specifically for the flow and sentiment information that I was kind of already providing. That's how I know that the pension funds are due for a $5 billion buy rebalance into the end of this month. So I pay attention to that data. That's how I know that the window, the blackout window for buybacks is beginning to end, especially when we can get through Apple being one of the biggest companies that does buybacks in the entire market. Then I go through the market technicals themselves. How are we gapping? How do I want to game plan myself around the market based on how we're gapping? Market always comes first. Stocks have a very strong correlation between what the market's doing and what that stock is doing.
Obviously. Hey, Derrick, can I hop in here 1 second? Sure. I know we're getting up against the clock. Just tell us about, real quick, what was your setup on Chewy? I mean, it made multiple lows in the same area. The stock has just been a serial underperformer. I mean, it got to distance itself from the lows, a minor breakout. Just tell us your setup and what you got into it. It was great you're following your plans, but what was your setup? What was your trigger on that one?
Sure. So stock is brutally beaten up, right? We all know that. I think at one point in the end of September, there were statistics that was coming out that was saying it was the most oversold like S&P 500 stock in the market. What does that mean? It doesn't mean come in and buy it just because it's an oversold stock. If anything, it means the opposite. It means be careful. You could look at it and say it's cheap at 24. And then by the time it's at, 1650, you're in a world of hate, a world of hurt before it potentially turns up. But what you can see here is in mid-October, it started to actually show a good bit of relative strength compared to the market as the markets continued to sell off. This thing actually started to create a base around this like 1650 area. And if you compare that to the market, the relative strength, relative weakness is a big thing that I pay attention to. The market's just continued to fall out of bed, whether you're looking at the average growth stock that's out there or the IWM or the SPYs itself. This Chewy has started to hold in. And then it finally gave a day one initial breakout candle here on some volume back on October 26th, where it was able to bounce off that base and continue higher. So for me, that's a signal. I had already started to build into a position. That's a signal to get a little bit more aggressive. This thing's beginning to tell me the right things. It still has a lot more work to do. Then if you go back on the 27th, which is a more recent day, I actually like that little rest day right into the 21 EMA, which is a spot that this thing has not been able to get above since it broke down from $37 back in July. I like that rest day. I like the relative strength again, which was helped a little bit with the market yesterday. And I was calling this thing out for continuation above 18 quarter yesterday if it was able to go. And then it did that in a small way. It wasn't a fantastic close yesterday, but then, a little lucky with the upgrade this morning. It was a position that I was already in. I'm looking to see if I can get a move into the low 20s.
Love it, love it. I don't know if you just have a dog and that's why you were looking at Chewy, but I know the life. I know. I always order from Chewy, and I was literally calling them yesterday. So hopefully that helps it out, right, Derrick?
So that's one of those things. I'm also a big believer in just paying attention to the world around you for information.
Love it.
And even though I don't have a dog, I live in an apartment in New York City, and I see the Chewy delivery boxes showing up left and right.
Exactly.
I talk to my friends who are pet owners. They all love the service. So, I don't think this thing is a zero, even if it's a growth story. And I heard you guys talking earlier about, the growth stories and companies with debt or they're not profitable yet. This is definitely a tough environment for them considering what interest rates are doing. But you're also looking at a company that you use yourself, which has had this big down move from 40 a couple months ago to 16. Doesn't mean it can't go to 13, but worth paying attention to when the relative strength comes in.
Love it, love it, and definitely looking around you to find trade ideas. Sometimes they're really great because when you go into the technicals like you did, you were able to find a nice setup there. Derrick Oldensmith, a senior trader and managing supervisor at T3 Trading Group. I also threw up your YouTube there, so if you guys want to check him out, definitely check out the YouTube. And we'll wrap it up here. It's always good to have you, Derrick, and we'll have you back on. Appreciate you coming on today.
Thanks, guys. Appreciate it.
Thanks, Derrick.
All right, guys, we're going to wrap it up. And like always, you guys can check out T3 Live. T3 offers superior capital access where retail traders can access. And of course, they consider themselves different than the new age prop firms like Top Step, Earn to Trade, and etc. You don't need to go through multiple evaluations. You can jump in, especially if you're an intermediate experienced trader, and start trading with them. They've been around for more than 20 years, have support teams from 4 a.m. to 8 p.m. And of course, they do education courses, one-on-one journal reviews, and access to the Pro Desk virtual trading floor. You guys check out T3 Trading Group.
Well,
Next time he's on, I'm going to ask him what happened to the heavyweight boxing division.
No, I know.
Did you see those guys?
I want to hear the kickboxing stories, man.
Yeah, Tyson Fury and
heavyweight
knock somebody out.
UFC happened to that, but I want to hear more kickboxing stories.
Yeah, or a little. We need some Muay Thai, something, man. But all right, let's get to
We've
the
had
action.
a good relationship with T3 for a long time. Obviously, I know T3 from my break trading days as well. Sean Hendelman, Scott Radler, great guys. T3 is for real. That's a great firm.
Definitely check it out, team. I'm going to throw up the link here one more time so you guys can check them out. Also, we have our own landing page, so you guys check out what T3 Global has to offer for you. All right, let's go to the market. How we looking here, Joel? Are we gonna have two Green Day rally? Could it possibly be?
Man, the market, it's a squirrely market here. We're maintaining the gains on the session. Pre-market low seems like a ways away right now at 24 handles. So I'm good feeling. Maybe the up streak will continue here. I'd like to hold the closing price in the morning and then take out that pre-market high. That's nestled right to Monday's high. So we get through there. We'll see if the market has an appetite for the 4,200 handle here. But we're green hanging on to it, and we'll see what happens. The closing price at 85.75. That's important to hold this morning.
All right, let's do one last headline. We got so many that we could have gone through, but which one to pick here? It's interesting day, of course.
180 companies reporting.
Yeah,
and, obviously it's just a ton, to talk about here. Last night, ANET was a big one as well. This morning we get multiples. I mean, we talked the CAT, we've talked some of the main ones here. I think jump into we actually should talk ANET from last night. It's getting a huge pop here. It's up 9% here now. The stock is near all-time highs. There is not a lot of stocks near all-time highs, so that's impressive in itself. Money Mitch, talk about the quarter. ANET.
All right, EPS here. Q3 EPS at $1.83 versus $1.58 estimate. Revenue at $1.509 billion versus a $1.48 billion estimate. and also guidance going a little bit higher here. Let me pull the guidance here for us. They see Q4 revenue at 1.5 billion to 1.55 billion versus a 1.47 billion estimate. So not bad there. And I don't trade this company often. So it's definitely something that I'm gonna have to pay attention to today after a nice little lift.
It's a nice pop, and a couple of people reaching out to me saying, oh, let's short this one. The one thing I will say is shorting the stocks that are up near the all-time highs is tough. I don't like shorting the relative strength. Nothing has been stronger really than this stock. Like, how many stocks are sitting here which are literally within striking distance of their all-time high? There is not a lot of stocks. So it's been an unbelievable performer here. It's not as easy to short those stocks as you think. I'm always, inclined to short the rip. I just rather short rips on stocks that are weak as opposed to short rips on stocks that are strong.
You just got a zone here, and whether you're looking at the monthlies or you're looking at the dailies, I mean, there's a seller there in the 197, 198 area. I mean, that's where it is. So if you're shorting here, then that's what you might have to hold on and wait. That might be your stop area, but multiple highs at that area. Don't know if it has the gas to get there today, but you just have to respect all those highs at the all-time high, and the all-time closing high was probably back on this day. In order to post a new all-time closing high, you got to close above 197.54. So I'm going to hop out of here in just 1 minute. I'm just
We should quickly just mention NVIDIA is getting hit here today. It's down $6. It's been hanging out here for a while. Obviously, valuation is a concern here still. I still think there's an AI story here that's going to get hot eventually again here, but I'm not sure the headline here today. There's multiple headlines yesterday. I don't think the Apple news is probably great for it here either. There may be something else though, because it was only down $2 and it's down $6 now. So I'm not sure if something broke in the last few minutes. Chat, let me know here. Obviously, we're doing the live show, so we're watching the headlines very closely here. I don't see a new headline here though, but NVIDIA looks like it's in danger of breaching the 400.
Yeah, low for the move has been 398.80, and you are still above yesterday's low at 481. Tommy Lackey joining us tomorrow, and he's made some good calls this year on pre-market prep. Let's see if the trend can continue. Everyone be safe out there, and I'll back with you later on.
All right, Joel's hopping out of here. He came real quick, but just to show you guys those gaps, Dennis, I'm not worried about this 400 gap. I think that for sure fills. I'm looking for the 370 gap. That's where I'm looking to maybe get NVIDIA back down in this bar here. Because I think
it's on the shopping list here. I think if you dollar cost averaging into it, I love the fact that we're still going to have this AI story here. So this is a stock that's definitely on my shopping list. I don't know if I'm getting a 300, 370, but
you said you take it at 310.
I think a 310, I'm buying the position. I'll be in NVIDIA if it goes down to 310, because then it's going to be trading like forward multiple like 22 times. Yeah. I mean, some of this is pull forward, and these businesses are cyclical, so you can't just take those multiples at face value here either. But I mean, this is my pick for the stock that's going to drive the next bull market when it eventually comes. I don't know when that is. I don't know if we're going to stay in this bear market here for a while, but NVIDIA is definitely on my shopping list.
And I'm going to take the complete opposite. And I think that NVIDIA, the truth is that I will feel that this report, when it finally comes, completely breaks the AI kind of thinking. Why? Because they gave such a rosy outlook for kind of what they'd get. And I think that they're going to not meet that expectation. And with that, you'll start to see other companies release that demand is slowing down for these AI chips. That's what I feel will happen.
And that's why we have a market here. So Mitch, and again, I'm not saying, I think we're going lower here. I think we're on the same side short term.
Yeah, short term.
But I'm going to be buying the dip a lot sooner than you're apparently going to be buying the dip. I'd love 310. 310 sounds great. I'm going to buy the position if it goes to 310. But it's 405 right now. I think both of us are in the same camp. It feels heavy. It feels like it wants to take out the 400.
And like always, you guys can keep up with both of us. Dennis Dick, Triple D Trader on Twitter, Money Mitch BZ. We're going to start wrapping it up here on Pre-Market Prep. Always good to have you, Dennis. Go do what you do best, my friend. Get to your trading action. All right, you guys definitely can keep up with Dennis and Joel on Pre-Market Prep Plus or the closing print at 3:30 p.m. Eastern. Up next, of course, we got our live trading competition. Yes, I said it. Live trading competition. Who wants to take part or at least check out the action? That's coming up next. So don't go anywhere. Stick right here. We're going to have another great show. And today's the Halloween show. So I know that some people were asking, Mitch, well, what are you going to dress up like? Well, if you want to go ahead and take a look into it, just stick around, team. And just to kind of mention a comment in the chat, Tennessee saying that Mitch hates AI so much, complete opposite. I am one of the users of AI daily, and I can show you guys that right now. I think I use it more than maybe Dennis and Joel. Well, I'll definitely say I think I use it more than Dennis and Joel. The truth is, it's all about the money. It's not about the products, the hype. Show me the revenue was what I was saying months ago, and I'm going to continue saying it. Show me the money, team, in AI. We'll see you next time. Like always, stick around. Pre-Market Prep will be here to get you guys ready for the open. Now, up next, we got live trading action. Don't miss it. Let's see what Lord Ryan and I can come up with today. It's our Halloween show, special show for you guys. Come on over. And if anybody's dressed up and wants to join the show, I'm going to be throwing out the link so that you guys can jump on and show off your costumes. Let's get to the action. Live trading starts up in just about a minute.